9th January 2023, Monday. Welcome back, MAO with Cal. Now, first 5 days will indicate the entire year direction. Well, according to some experts, apparently this is possible. That means that if you the first 5 days of the trading day, and we talk about S&P, if the first 5 days ends positive, there's a very high chance the entire year will be positive. Okay, so the S&P is now up by 1.5% from the last 4 days. So as long as the Dow Jones keep above, okay, just flat closing by tonight, we can see a pretty good year. So that is what the market is saying right now. So let's see whether can we high-five like these guys here. Alright, before we go into that, once again, disclaimer apply as usual, and thank you AIMS for the kind sponsorship. Alright, let's recap what happened on last Friday, shall we? So apparently the last Friday, oh my god, the Dow Jones rallied 700 points, 2.1%. Nasdaq 300 points, 2.78%. And of course S&P up by 2.28% or nearly 87 points. So this 2.28 basically cover the losses, okay, the first 3 days. So the fourth day, a 2.28 has basically made the S&P is up by 1.5% overall. So Microsoft was up, Google was up, but Apple was a stunner, up by 3.68%. Amazon up by 3.5%. And even Tesla is up by 2.47%. So what happened? Okay. So first of all, the stock basically rallied big time for the first 5 days or first 4 days of 2023, up by 700 points, because people are now telling each other that, okay, maybe inflation will ease. Okay, so what's the reason? Well, apparently the non-farm payroll was 223. Hey, isn't that higher than the 200 expected? Yes. But apparently 223 is lower than the last one. So that's a key point here. So it is declining. So that's why people feel that it is good. And of course, the wages also grew slower. Apparently now only up by 0.3%, while economists look at 0.4, and the last one was 0.6. So this makes the market feel that, hey, you know what? Really, the current interest rate hiking has created or has made the inflation coming down. Gosh, I really cannot understand this, but I'll leave it there. And the ISM manufacturing data also contracted. So while we have the contraction of ISM, we have wages coming down a little bit. We have this jobs still there at 200 but lowering. So this basically gave Wall Street the reason to buy. So if you look at it right now on the screen, you can see that the numbers is seemingly declining from October onwards. Now we all know that interest rates have been hiking since July onwards. So basically, this is what the market feel that now is lowering. But the thing is, the unemployment rate is still 3.5%, and that is like, it has reduced from 3.7 to 3.5. But the thing is that the market don't care. Who cares? Everybody just want to focus on the buying, and of course that's where the prices, the market looking at that as perspective. Alright, so when the market want to buy, they don't give you a care what really is the reason. As long as they find a reason, they'll squeeze it in and they get it done. So of course, another good thing is because Eurozone inflation rates has slid to 9.2% from the 10%. Okay. So sorry, this is for Eurozone. Now Germany is from 10% dropped to 8.6%. So because of Eurozone sliding, Germany sliding, that's good. Okay. Let me just take a look here and double confirm. I think I forgot about that. Okay. Anyway, so the thing is that now the ECB is forecasting that the inflation from 8.4 for 2022 will drop to 6.3 for 2023 and 3.4 by 2024. But the point is this, ECB mandate also looking at the 2% mark is similar as Federal Reserve. So if we compare that ECB expect that by 2024, then we can go to 3.4. I can't see how our US Federal Reserve can do something different, alright? And of course, Germany also has an inflation dropping from 10% to 8.6. So everything seems that the inflation is coming down. But I just feel that way. Okay, fine. Yes, it came down from 10%. It's a good thing. But we're still 8.6%. And that is because the crude oil price has came down quite a fair bit. So if any time the crude oil price goes up again, we have a problem. But of course, you may say, Cal, how can the crude oil be going up? Well, one good reason is if China is coming back to really full-fledged into the economy, then naturally the demand for the crude oil will be there. But of course, you will say again, but Kel, isn't that you're saying that the COVID virus is going on around in China, so maybe this is not going to happen? Okay, well, then doesn't that mean that the export will have a problem, the supply chain will have an issue? So you see my point. I mean, I'm not trying to argue my way in, but I just feel that this is really overdone. Yep. Now, China, as I suspected, they suspended more than 1,000, accounts. Apparently, they have basically, closed more than 1,000 social media accounts because of the critics of the government policy or the COVID-19 outbreak, alright? Now, I believe that this number is more than that. Alright, so they addressed about 12,000 over violations, and they decided to close 1,000 of them, but I believe it was more, alright? So, because people are citing that because of the without the adequate food, medical care, and then overcrowding, hygiene, all these are very, very important stuff to people, but because China was not able to do it, and then that's the cause of problem here itself. So, if you tell me that if I can't have my voice, that is pretty clear you're in China most probably, alright? So, there is another thing that to watch out for. Is very interesting. This is actually from, I think there's some PowerPoint issue. Give me a moment. Give me a while. Okay, here we go. Okay, wait up. There's some issue right here. It's not able to reflect immediately. Okay, hold on a minute. Here we go. Okay. Alright. But Bill Miller doubled down on Amazon after a rough year, and then he's increasing shorting on Tesla. Okay, this is pretty interesting. By double down on Amazon, I think that's what you can hear from a lot of people. Many people around me, in fact, is telling me they're going to buy more Amazon. They believe that Amazon will go up and stuff like that. Okay, so in value investor Bill Miller says doubling down on Amazon after a brutal year and growing his short position on Tesla. So apparently now, he said that the thing is that the e-commerce had lost more than 50%, so it's a no-brainer to purchase it. So he's been buying a lot more shares, you can see over here. And they believe that this year, the all-time record profit will be able to come in for Amazon. But there's going to be a different story for Tesla, as you feel that Tesla is, although it's a phenomenal company, but it's not worth $380 billion as current price right now. Let's just hear what Bill Miller has to say. Let's bring him in. All right, let's go.
Macro for the past year or so. It's been about the Fed. The markets tend to have days where 95% of the S&P is up and other days 95% is down. I don't spend any time thinking about where the market's going to be or where it's going to go. I'm just trying to figure out if there are cheap names out there, names we think looking at a year, 2 or 3, that we can do quite well in. And I do think in this market that is absolutely the case.
So more opportunities for you after what was a pretty rough year last year. Where do you see the most value? Are there certain sectors or pockets of the markets, or it's just individual names for you as always?
Well, the market's like a giant Rorschach test. Everybody sees what they want to see in it. For us, I think it's a lot like, or for me anyway, I think it's a lot like 1939 when John Templeton, who founded the Templeton Growth Funds. So in 1939, when Hitler invaded Poland, John borrowed $300 and told his broker to buy he was in his 20s, to buy every stock in the New York Stock Exchange traded for $1 or less. And he did that, and that was the basis for his fortune. And more than 30 of those names were in bankruptcy, but only 4 actually ended up worthless. And I think right now it's pretty much, if you look at Burton Malkiel's random walk down Wall Street, I think if you throw 15 darts at the market right now, I think you're going to do quite fine if your time horizon is a year and a half or so.
All right, so you can hear what he says. Feel that the market now is kind of low right now, and if you throw 15 darts on the stocks, likelihood you will outperform. Okay, I'm not going to comment. He's a billionaire, so I'm not going to say that anything else. But my point is this: I feel that the market is cheap, but it's not low enough, in my opinion. A bit more to go. Another 15%. I think that will be great. Okay, another 15%. All right, let's look at Amazon right now on the chart. Let's take a look. Now, Amazon, as you can see over here, Amazon is now trading at $86, okay? And I did mention to you at 86 is a very important technical level, which you can see right here since April 2020. So it seems that last Friday, the buying came because of the 86 value, because it went down to the low of 81 and rebounded back to 86. So, well, seemingly that this 86 is a very important level to stay on top of it. All right. Anything lower than that is all right. 81 is the last straw. As you can see over here, 81 is the last straw. Very important. And I mentioned that 81 itself is the last one because that was where the low was. I think I made a mistake over here earlier. Alright, so 81 was the last low back in March 2020. Alright, so apology on that. So as long as 81 stay focused, we should be able to see 86, we have seen. And if 86 can cross, we come back to 102 again. Okay, but the thing is, if the market loses 81, oh gosh, okay, this is where I believe that the 65 is something like what I believe in Tesla. I feel that Tesla and Amazon can hit $65 in the next 2 to 3 months time. Alright, that's my personal view. And if the Amazon do come down to $65, if ever happen, this will be a buy. Alright, that will be a very good buy. So take note of this. If Amazon hits $65, it will be a buy. Okay, at least we know that the winning chance is there. Okay, so take note of that. This is what I mentioned here. Okay. Alright, so Jim Cramer says that there were 5 stocks that he's watching right now, and he want to share with us here. Okay, there's a bit of another mistake over my side, technical issue. Let's take it in right now. Jim Cramer says that there's these 5 stocks or 5 losers could rebound in 2023. So main thing is that they were losers, yeah. So they are the stock that actually lost money. I mean, they're down for 2022. So who are they? Let's take a look. Well, we have Qualcomm, we have Lam Research, Micron, Airbnb, and Illumina. Alright, so what is the deal here itself? Kramer says that the semiconductor company will start losing orders in 2024. So basically, it's alright. He feels that it's possible to get hold of this overdue. Yeah, so it's due to push into the auto market to help the stock. Okay, alright. So Lam Research, he feels that could be ugly for chip maker, but he feels that it could be bottom out soon. Okay. Micron, he says that right, it's all about the chip glut that's happening right now. And Airbnb, he feels that right, the travel boom will come in because of COVID has ended in a way, so people are coming back. And Illumina feels that right, it is just a feeling overall. Okay, so well, I got no idea of these companies. All I can say is that I won't buy companies that is so badly hit. But undeniable, of course, if the market is low enough, anytime anything rebound, any strong rebound, company like this with very low liquid can rebound quite frenetically. Okay, so this is the one that I talked about this earlier. Simple first 5 days. Stock market indicator poised to send a good omen for 2023. Okay, so what is it all about? So apparently, alright, according to the stock Trader Almanac, says that right, the phenomenal studies go all the way to 1950s. Okay, so if let's say the first 5 days of the trading of the January month is positive, usually about 83% of the time the market will gain at least 14% from where it ended in 2022 in this case. So let's take a look right now. Well, not too bad. Okay, the 5-day change is the one in dark blue. The lighter blue is the year change. So in year 2010, not too bad. Yeah, it was positive, and then the market ended positive. All right. In 2013, it was something similar. Wow, the market went up so high. Now in 2014, it did not really do that because 2014 it ended negative slightly, but the market ended strongly for the year. Okay. All right. Then of course we had another flip again in 2015, whereby it ended off positive, but the market ended negative. Oh, okay. In 2016, it was also opposite, whereby it ended negative, but the market ended positive. But of course, later on again, everything goes according to the plan, right? Okay. So of course, in 2022, we saw the market ended negative. That's why the market actually ended negative. Okay. So from the last 10 years, it seems that okay, that in this so-called setup or indicator seems to be quite good. Yeah. So of course, we need to watch the S&P 500 right now. As long as it stays positive by tonight, then we may have the entire year positive. So that is what this article is trying to say. Now, for me, well, all I can say is this: a lot of things are by pattern. And of course, it's a one whole year thing. You know, watch the price action to trade according to plan. Yep. So the S&P now is up by 1.5%, as I mentioned earlier, for the first 4 days of 2023. So as long as today the market stays up or flat, that means it's 5 days. And of course, usually this phenomenon should be good for people who want to invest and hold for longer term. Okay. All right. So once again, guys, thank you for the comments for this one. I have no time to update this story about this. But all I can say is thank you for all the comment, and later on we will do the spin the wheel lunch with Kel thingy. Alright, so let's look at the charts for today. Yeah, okay, let's go. So for the charts for today, let's take a look right now. We can see that the market, let's take a look. This is the China A50, and after it broke above the MA30 and MA200, which I mentioned to you, this was a real outbreak, and that's where the market went all the way up higher. Now, there is a clear resistance somewhere around here, because if you look at it from here, if I'm going to make the screen a bit smaller, you can see my reason why. Well, this is where we are right now, but you look at the China A50, this has been a downward trend rather significantly. So based on the RSI reading itself, right, we are bullish. I repeat, we are bullish. So we need to have another pullback first before the upthrust and going to 14,900. Now the thing is, for China, as long as the funds are buying in and foreigners are coming in to buy the Chinese stock, because now the market has been down quite a fair bit. So there could be a transition of funds from Europe, US, all the way to China. And in China now, once they have finished their COVID waves, it will be able to present itself a good time for the manufacturing export to come back to life. So that's the reason why there are some people are looking to buy into China stocks or China ETFs and REITs and stuff like that. Now for me, I will rather wait for the market to pull back down another wave below 13,000, then it could be a better time to buy. This is how I feel it, but I feel that that's it. We are almost near the end for the China bearish month. We can see a upthrust movement very, very soon, okay? Alright, so this is my KFC. I think some of you have already noticed that. My KFC shows its power. On Friday, when it crossed and stayed above 33,031, I mentioned repeatedly, the market will go up. And truth be told, after the market broke above 33,031, the market went up, and now it's at trading at 33,700 series. Now, how high can this market go? Well, by right and default, right, the next level the market could be going is 34,000. All right, I repeat, 34,056 could be the next target, because this is the KCB level. If you ask me itself, right, it's a pretty good gap up. So as long as it can maintain this, usually a gap up with a follow-through buying will be very positive. But if the market closes down and cover the gap, it's very normal. If the market pulls below the MLP, then we have a bit of problem here. Okay? And for the NASDAQ, you can see we have a very, very strong base on the KCB, which is at this 10,816 level. Every time the market cannot really go below it, it goes up. Now on Thursday, the market closed down. I thought that it's going to bring the NASDAQ lower. But, well, too bad I'm wrong. The market actually closed back above the NASDAQ, this KCB level, and that's why the market is now slightly higher. Alright, so that is the NASDAQ. For the Hang Seng, well guys, this is how powerful is this. Remember I told you about my Hang Seng KFC level, the Kel flip chart level. That was at 20,103. I said that if the Hang Seng cannot break, it will come down. Cannot break, it will come down. Cannot break, it will come down. So for 4 times in a row, the market couldn't go past my KFC level. That's why the market came off. But incredibly, which last week, when the market did a super recovery from the bottom all the way up and broke the KFC level and closed above it, you can see that the market actually, wow, look at it. It went up by 1,300 points in just 3 to 4 trading days. So once again, the KFC has its power, guys. Look at the accuracy. Look at the way when it resisted itself. There's no way it can go higher. But when it broke resistance, woohoo, look at it. Beautiful. Alright, so that is what we have. And of course, the one that everybody talking about is gold. Now, I know that I've been calling buy on gold for some time, but I just can't buy it right now at this price. Kind of expensive in my moment. Once it pull back, it'll be great. Now, KFC for gold was here at this 1726. And again, you can see when the market couldn't stay above it, it pulls back down. Tries again, beautifully, came back down, ding dong for 3 times, and decided to go past it. And once it crossed this point here itself, that means that it is a strong buy. And when the market pulls back, the incredible part is that the market stopped exactly where we were, looking at the buy, and then double confirms the buying because the BNB at the low. Wow, look at it. From there, with here itself, the market went up by 30 trading days or about $150. That is amazing. So guys, this KFC will be made available for version 6, okay? For version 6, okay? So if you are hearing my video right now and you want to put a comment in, I give a bit of little help here. Type TWB version 6.0, you qualify. Of course, if you leave a comment, it'll be even better. But if you want to can't find any idea right today, then put there TWB version 6.0. Okay, I help you here. All right, so that is the introduction to KFC level. Let's just look with the traditional, TWB chart, shall we? Now for TWB chart itself, right, we can see pretty clear that today the market stays above the BNB RL level, and that's 33,481. So as long as the market stays above here for 33,481, as long as it stays above it, no problem. Now this is a CCRY. Now this is yellow, red, yellow, red, yellow. Now of course this is a zebra formation. By right, with this zebra formation, we should see a higher level. We can be all the way to pivot 1 at 34,118 level. But and KSI is supporting it. It's turning green right now. So that means the boys are coming in to buy. And the KRW, which is like red, so there's a mixed conflict of interest here. But the point is that as long as the market stays above opening price and above MA30 and MLP, well, things should be able to go higher. Only when it breaks below the BNB RL, then maybe selling will come in. Alright, so take note of that, yeah. For the NASDAQ, well, we have a new BNB. Now, this is incredible. For 1, 2, 3, 4, 5, 6, 7, 8, 9. Within 9 trading days, we have 3 BNBs. Wow, that means that almost every 3 days, 1 BNB. This is something that unprecedented. But again, what's trying to tell me? Well, from the look at it, the angles looks getting bigger and bigger. And KSI and KRW both are red at the moment. So upside itself will be limited to about the KFC level, and that will be 11,099, which is somewhere very nearby where we are right now. So if the market breaks above the 11,099, then of course MA30 will be next, 11,143, and then the KCB can stretch all the way to 11,255 to even 11,340 level. On the downside, as you can see, if the market has been hovering here itself, right, that means that we have to be careful. The market has some strength at this area here, and that's about 10,674. Okay, so watch out for this. The pivot one today is 810899. So it means above OP, above pivot 1, by right is a buy already. Yeah. So take note of all these numbers so that you can look out for to trade in the market. Okay, I think there's a bit of issue right here. So on my indicator, let me just give me a while. Okay, let's just set the symbols a bit. Okay, as we're waiting for here itself, right, I just want to gently remind you guys that trading has never been easy. You really need to understand your own, yourself very well, because it's not going to be useful or helpful if you don't know what to do next, right? So this is the S&P 500 chart. You can see very, very clearly that, okay, the market itself, January from 1st of December last year until now, has been not very positive with this particular counter called S&P. And of course, periodically the boys was buying and selling. So the moment now the boys are actually buying. So if that's the case right now, there's a blank area here that is actually representing positive. So positive plus positive, that's why you can see there's a green arrow there. So S&P 500, as long as it can break above 1239.12, we can see going all the way to 40.20. Okay, 40.20 is next. But if the market gets itself resisted at the BNB RL level, which is somewhere around 3909, where we are right now, then a pullback is possible. All right, so this is something that we have to take note of. Yeah. Okay, so that is S&P 500. Let's look at the. Okay, there's a few missing market now at the moment. Let's just do me favors. Earlier I just did some updating. I think that's where I lost some of the data. Okay, never mind. We can just quickly do it. No big issue. No big biggie here. Okay, done. Alright, so that is this. Okay, let's look at the DAX right now. DAX is, I think, have already started trading. Yep. Okay, so DAX for today is actually now trading above the BNB RL level, and also this is the new support level. So what we have here itself is that if the DAX stays up, we can see going to, up to 14,811. But if the market really goes back below the BNB RL, we can see coming back down to this MLP at 14,589 level. All right, let's take note of that. Yeah. Okay, let's look at the other market now, like gold. Okay, so what we have for gold, we can see pretty clear that gold is now testing the pivot 1 level, and that's 1880. This morning it was opening price was here around 1865. It was above the MLP, it's above the MA30, it's above the MA200, and of course I think it's all above all the thing here itself. So the upside should be around here at 1880. Anything higher, I think it'll be 1882 max, because that is the KCB level. Anything more than that is alright. That will be 1896 already. Now for me, I feel that it's really not a time to chase after gold. A pullback will be welcome, and then after that you buy will be better. That's how I see it. But KSI and the KRW weightage, both of them are still very positive, so you can give a try then. But I'm not going to chase here. I'm going to tell you upfront. I will just wait for a while. Yeah. Sometimes in life you just need to go slow a bit. You can get what you want by default. Interesting. Okay, so this is silver. Silver has been sideways and touching the $24.13 for the longest of time. Now do note the speed that the thing is that if the market can really break above this $24.13 resistance, the next target will be easily $24.65, because that is how technical outbreak will be. Yeah? So silver is okay. It's not a bad thing to do. You can just basically tell people what you want, and then this Smith will just do it for you, right? Okay, hold on, there's some error here on the arrow's not able to go up. Okay, here we go. But the BNB RL, which is the here itself for silver, is 23.51. It has to stay above. We had a breakdown recently, but it recovered because the boys are showing that there's some more buying is coming in. So just take note of this important pattern here. Yeah. Okay, so let's go in silver. Let's do it. This Bitcoin right now. Okay, Bitcoin can't do this. Just give me a moment. Bitcoin needs to do another chart. Okay, so Bitcoin today has blasted above the BNB RL, which is something that surprised me. Well, most likely the dollar is weakening. Most likely the dollar is weakening. Let's bring in the dollar and see what we have here. Right? Let's bring in the dollar right now. Okay, here we go. Okay, moment. Here we go, the dollar. Okay, so let's take a look at the dollar. Wow, the dollar came off quite dramatic on Friday because of the so-called inflation is coming down. Not to worry about inflation. Hence, therefore, interest rate can come down. Can go slower for US. Oh gosh, this is really ridiculous because you've seen it so many times. Once you come and draw nearer again, there'll be an increase again, and the stock market will just replay the same thing over and over again. But of course, right now, the 10-year yield is trading lower. I'm pretty sure that will give you a good experience over here around this 103.40. And 103.40, once it stays again, the next batch should be able to see 105 because they need to get themselves prepared, and I feel that way too. Then of course you can look at this with this is dollar yen, my bad, wrong one. We had the Bitcoin. The Bitcoin is moving up slowly because I say again, the boys are actually watching it very closely, and of course as long as things doesn't change, it's fine. Okay, then of course the VIX itself. Now the VIX basically pulls back, broke my trend line, but it's still above the cycle high. So I was just thinking out loud, maybe we can come down again somewhere around here at 20 level to buy some VIX itself. Right? I'm still a pretty strong supporter on VIX, but I haven't bought yet because I feel that it may have to go down to 21 level, then it'll be a very, very good buy. At the moment now, if you're throwing no money in the market, all right, that's how I feel it. Okay, so that is the Bitcoin, and last but not least is Ethereum. I think I have not have the symbol here today because of I was doing some backup. So I'll give Ethereum a miss. But I believe that they move in tandem. So of course, if Bitcoin is going up, then there's a good chance Ethereum also follow through. All right. Hope you enjoyed this video. I'll see you again tomorrow. This is Cal signing off. Bye bye.